have been impressed with the urgency of doing. Knowing is not enough. We must apply. Being willing is not enough. We must do. Leonardo da Vinci. My friends, each and every day, 10 to 15 minutes, that is all we ask, and you have to do it. And you have to do it each and every day to learn the nuances of the market, of your favorite stocks and ETFs that you track every day. Practice trade all you can. Take our lessons that we put out in the email each and every day. If you haven't signed up, go to chartingwealth.com. Sign up for free. That list is never spammed, never shared. We send out no more than 5 emails a week, 1 a day. If it's a short market week and only 4 days, you only get 4. Let's jump into these charts. And Patreon members, thank you for all your support. That's the only way you get my new book. It is 3-Wave Trading Mastery. How do you get it? You get it by subscribing. Now, let's jump into these charts. We see stocks are down for the day. Gold and Bitcoin down. The only thing that's up, and it's barely up, that is 20-year U.S. government bonds. Let's jump into these charts and tell you where we are with the S&P 500, which is where we always start. Now, do look, we're coming into Friday, okay? As we look at where we are with the volume, we could hit average volume. We're not up there yet. We've been below it for many, many weeks. We've said over and over again, the last time we had above average volume, we really had above average volume. That was in the week beginning the 7th of April. That was a plunge, those 2 weeks. That was around the time isn't that when Trump told us that we were going to have all those tariffs in the market? Took it very poorly. Then, of course, what happened? Things then flattened, and then we got a beautiful classic turnaround. We had high volume. The only thing we didn't have with the turnaround, again, was average volume. We got close on that doji week, literally a green spinning top, then what we'd call a dead week. Then things turned around and rocketed up, and we've hit a higher high this week. But again, as we look, and if you look here on the half-day chart, you will see, and you'll see higher than average volume at the end of the day. Now, that red down candle means, well, the red volume means it opened lower in the afternoon than the prior close. You can see in the morning it opened higher than the prior close. That's all that red means on volume. But we can see where things have tracked, just moving up on that half-day chart, bouncing down and off the weekly trend line, bouncing down again and off the weekly trend line. And it may be bouncing down again. Look at the 2-day. We've got average volume there. It's finished drawing, and it's been pretty good for the last many days. But again, we'll keep our eye on the prize, down 0.48% for the day. Our prediction, now yesterday we were at 80% bullish. Today we've dropped down to 70% bullish. Our backtest accuracy has gone from 83 to 80%. And as we look at things, our prediction is, of course, a 70% probability the price may rise to 600 after the correction, which is the next psychological level. Our bullish setups after pullbacks, and again, like we saw throughout the month of April, succeeded 4 out of 5 times across time frames, yielding an 80% accuracy. So again, April and May, as we looked back at things, we have seen that, again, working 80% of the time. Now, I love to be at 80. I love to be at 85%. The higher the percentage, the better. I don't want a 60, 65%. Why? It's a little bit better than a coin toss, but not a whole lot better. And when you don't have to trade, my friends, unless it looks really good for you, why would you trade? Remember, first rule of trading is don't lose money. Second rule of trading, don't lose money. Third rule of trading, make money. And you make money when you're betting on sure things. You're not catching a falling knife. Now, that's where we are on the S&P. We'll see how the market wraps up on Friday. We're still long. Let's look at where we are on the Qs. It pulled back more. It's been going up more. It pulled back 0.75%. Now, we look at where we were yesterday, 75% bullish. Today, we've gone down to 70%. That means the S&P and the NASDAQ 70% bullish. Don't forget, you don't have to write all this down if you're a subscriber at chartingwealth.com, because we email to you every day the trade execution summary grid. You get it. So you don't have to write all this down. You also get the entry and exit points. You get the expected move in dollars, and you get the back test accuracy. And again, we're not a stock calling, Bitcoin, gold, or bond calling service or an education firm. We want you to practice trade with us. But we're at 70% bullish on the 5-day plus directional probability with an 80% back test accuracy. Now, as we look at things on the NASDAQ, our consensus is that we are bullish long-term, but short-term correction on the 2-day 195-minute charts likely to resume upward. The prediction, bullish 70%. Price may reach 534. We're at 524.79 right now. And like I said, we have an 80% back test accuracy. That is bullish setups after corrections have succeeded 4 out of the last 5 times. So keep your eye on the prize if you are in now. Of course, we are still long on the NASDAQ and the S&P. Let's take a look at bonds. Now, I've been warning about this as things potentially set up here. Look at where we are with volume. We've got average volume already on a Thursday as we go into Friday. We have an interim low with high volume. This could be a turnaround. Now, we saw what? We saw that happen before, but the plunge was way back. It went down 2 more weeks. Then you got a green spinning top, but no volume. We like to see volume in a turnaround. This could be a turnaround. Now, our mathematics tells us, as we just look at the charts, we're bearish at 85%. That is our directional probability over the next 5+ days. We have an 83% back test accuracy. So I could be wrong what I'm seeing there, but I am paying close attention. You can run numbers, then you can also see what there is to see and look at your prior experience. Our consensus is strongly bearish over all time frames with the price supporting at 84.29. We're at 86.45 right now. And prediction, like I said, 85% probability. The price may drop to 82.50, which is the next support level. And like I said, we're at 86.45 right now. The back test accuracy, again, for these bearish setups, has succeeded 5 of the 6 times in the recent past. That's yielding an 83% accuracy. So like I said, I could be wrong, and it's going to have to be backed up, by continued movement up. If it's not reaching a bottom, or if it is reaching a bottom, it's not reaching a bottom, of course, it's going to continue to go down. It's going to roll back over, but we've broken that trend line. I'm just not seeing what the math is telling us, but, that's just the way I call it. Let's look at where we are on gold. Yesterday, we on gold were at a 65% backtest accuracy. Probability of directional movement over the next 5 days. Our backtest accuracy stays the same at 67%. So nothing's changed on our bullishness on gold, although it was down 0.50%. We can see a lot of volatility in the morning, 195-minute chart, then over going down in the afternoon. Lots of volume here, but it opened lower than the prior close on both. We look at the 2-day. It has closed, but we didn't reach average volume. And we're a long way away from average volume this week, so I'm just not seeing gold catching fire to boot up toward that prior high, going all the way back to the 21st, the week beginning the 21st of April. I will tell you that our consensus is bullish long-term, short-term correction and consolidation, likely to resume upward after consolidation. How do you know when that movement continues upward? Well, my friends, that's not all that hard to see, because you'll see green up candles on the 195-minute chart supported by green volume as things start climbing. Now, again, we do have 2-day candles in a row going up, but again, that volume has dropped off. So keep your eye on gold. Let's see we're still long on gold. Now, lastly, we will take a look at Bitcoin. Bitcoin pulling back again right at 3%. See what really dropped off in the afternoon. You can see the volume there. You can see the volume on the 2-day. Looks like we're probably not going to reach average volume. And the thing I keep warning you about is even though our numbers say we're bullish 60%, now again, 60, 65%, that's just a little more than a coin toss. I'm seeing lots pushing things down. But our numbers, when we run the numbers are telling us, and again, we're giving equal weight to all three charts, that we're 60% bullish over the next, and again, this is over the next 5+ days, 60% backtest accuracy. None of that is compelling to be bullish on Bitcoin. Because why? Well, we reached the high of highs 2 weeks ago, back in the week beginning 19th of May. We've clearly broken the trend line. We have a red spinning top. We don't have the volume backing it up like I'd like to see, like we're seeing, of course, I'll go back to what we're seeing happening in the opposite direction on 20-year U.S. government bonds. We have the volume. See, it's at average volume. We have the interim low, which is at above average volume. We have the dead week in here, and we have the confirmation of the turnaround with that volume. We look, and again, we're looking at the opposite happening, but the same rules apply. You want an interim high, which we have here. We have sort of the dead week where things are slowing down, and then we have the drop through. We don't have the volume backing that up. I'd like to see, and maybe it'll be a big volume day tomorrow. Get us up to average volume. That'd make me feel better that it really is breaking. Lots of people are taking their profits and Bitcoin's pulling back hard. That may not be the case. It's not the case with the numbers that we ran, but again, that's weak. Just like gold is weak for more bullish up movement at 65%. Bitcoin weak at 60% and a 60% backtest accuracy. So again, keep your eye on Bitcoin. Really fell off in the afternoon and overall down, as I said, right at 3%, 2.96 to be exact. My friends, that is where we are. Always enjoy. No matter how busy I am every day, if I can find time to do this for you for free, I know that no matter how busy your world is, you can find 10 to 15 minutes to follow this program, enter your practice trades, follow along with us. Do one of those trainings. You don't have to do them every day. Find them that are interesting to you. Of course, become a Patreon member. Get our book, 3-Wave Trading Advantage. You want it. You want our training also that comes, if you're interested in options Made Simple, the Charting Wealth Way. You get that 3-part series at any of the 3 levels of support at Patreon. We so appreciate that. It helps underwrite the cost of doing the channel for free. Thank you so much, my friends. God bless. All the best from the whole team at Charting Wealth.